Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Once again, happy Friday, everybody, and hope everyone is doing fantastic. Well, interest rates finished the week at about the same levels as where we ended last week. Now, at the end of last week, we saw the jobs report came out, and it was a stinker, and that actually helped mortgage-backed securities. And we saw a little bit of that rally continue into this week, but then we lost some steam. And we're at a real pivotal level with interest rates because both mortgage-backed securities and the 10-year Treasury is trading right around that 200-day moving average, which is a really important level. If we were to have broken through those levels, through those ceilings of resistance on either or both mortgage-backed securities and the Treasuries, that would have boded really well for interest rates. However, we failed to do that. We're right at this critical level here. We're still real close. So if we can just make a big movement through those, that would be really good for interest rates. Interest rates are still fantastic. We're at the best levels since right after the election, since about November 17th. So interest rates are really, really good. If we could get through those levels, that would be fantastic. We didn't see a whole lot of economic data that was released into the market. CoreLogic did release their home price index, and it did show that things moderated just a little bit. We saw a 0.2% decline on the CoreLogic number, but for the forecast for the nation for the year, that actually went up slightly on what they predict should be happening next year. Now, next week, we're going to see a whole lot of economic data released. It's going to be a real important week. We're going to see information from inflation on the housing side, but most importantly, we're going to see the Federal Reserve meeting. There's going to be a press conference afterwards. Most people are expecting mortgage-backed security, the Fed funds rate to increase by another 0.25%. The market's going to be wanting to find out what the Federal Reserve is going to do exactly with the runoff of mortgage-backed securities. So it's going to be a real important week. That could be where we just dramatically break through these 200-day moving averages, or we go back up, we go down below it and are still trading below that and didn't break through. So we'll keep you informed as to what's going on. If you have any questions, please feel free to give us a call. It's a wonderful day out here. It's going to be a wonderful weekend, so it's a super weekend to be out there with clients, looking at homes, taking advantage of these low interest rates. And if you need any help, or any of your clients need any help, please feel free to give us a call. We'd be happy to help. If you're working this weekend, so are we. Thanks again for joining me with Java with Jared. Have a wonderful weekend. We'll talk to you soon, all right? Bye-bye.